Hello and thank you for joining us. Today we'll be speaking about the Variable Capital Company or VCC, which came into effect in Singapore since January last year. The VCC is a new type of investment fund vehicle that aims to further strengthen Singapore's position as a hub for fund management activities. Traditionally, fund managers have often established their funds in locations such as the Cayman Islands, Luxembourg, and Ireland. The attractiveness of the VCC means that a lot more fund managers are now choosing Singapore as their option for fund domicile. The main benefit of VCC is its flexibility. The VCC can be used for a range of investment strategies. For example, it can be used as a mutual fund for retail investors, an institutional hedge fund, or even as a multi-family office. The variable capital structure facilitates investor subscriptions, redemptions, and distributions. It can also be set up with segregated investment compartments such that multiple sub-strategies can be employed within each vehicle. The investment compartment incurs liabilities on its own and is insolvency removed from the other compartments. Managers are also able to re-domicile their funds that are situated or established elsewhere by registering it as a VCC in Singapore.
Now, setting up a VCC is a relatively quick and straightforward process. It can be registered with the local company's register within a few days effectively. But there are a few conditions that need to be considered. The first is that a VCC needs a Singapore-regulated fund manager. Now that can be, for example, a fund manager licensed or registered with the MAS. If you need to go through the licensing or registration process in first instance, it's worth bearing in mind that that can add about 5 to 9 months approximately to your overall project timeframe. Another condition is that the VCC needs a director, at least one director, who is ordinarily resident in Singapore. One of the directors of the VCC also needs to be a director of the fund manager or a qualified representative of the fund manager. Now, if you have a particular individual who can satisfy all of those conditions, then that one individual will qualify for all of those purposes. Once set up, the VCC needs to comply with certain ongoing requirements. One of those is that it needs to have a Singapore-based auditor that can audit it, needs to prepare financial statements in accordance with accounting standards, and also needs to return an annual return to the Singapore Companies Registry. A particularly important requirement is that the VCC needs to comply with anti-money laundering and countering the financing of terrorism requirements, including, for example, due diligence on customers. It needs to take records of the due diligence undertaken, as well as transactions executed. In practice, it can delegate the performance of those obligations to a fund manager. Existing tax exemptions that are available to Singapore fund managers and their funds have been extended to VCCs. In addition, under a scheme that will run until January 2023, fund managers are able to claim back 70% of eligible costs up to a maximum of 150,000 Singapore dollars per VCC.
We have assisted many clients in the structuring and establishing of their funds. If you're looking to set up a VCC in Singapore, we're able to help you in multiple ways, including arranging for the VCC to be registered, preparing the investment management and offering documentation, assisting in obtaining a license or registration for your fund manager, and documenting the control and governance framework between the manager and the VCC.
If you have any questions or you'd like to discuss how we can help you, please feel free to reach out to either of us. Thank you.
Thank you.